please and please resist the temptation. Resist the temptation to 5 money management rules every beginner forex trader must follow to be profitable in this business. If you haven't subscribed to the channel, please subscribe now and leave a like on this video because you're about to learn something serious. Let's go. Number 1, anytime you take an SL, whenever the price hits your stop loss, please and please pause, take a break immediately after your first SL for the day. Do not rush back and trade. Do not say, oh, as I got SL now, let me quickly try and make up the money that I lost. No, that is called revenge trading, and revenge trading leads you down a very dark hole of back-to-back losses, because at this point you are trading emotionally, you're not thinking straight, you're not following your rules. You get? So rule number 1, after every stop loss is hit, get off your phone, get off your trading system, and just go and do something else. Take a break, go and eat, go and walk, go and do something, watch Netflix, whatever, hang out with your friends and family, but stay off the charts immediately you get an SL. The second money management rule beginners must follow is that if you take 2 SLs in a row back to back, just close the chart for the entire day. This one is not about taking small break and coming back. Take a break for the entire day and come back tomorrow with a refreshed mindset. This will help your psychology, honestly speaking, because if you're going to go ahead and take a new trade after 2 SLs back to back, chances are your psychology is going to be messed up. All right, the chances are the third trade is also going to hit SL. You understand? So take a break from the chart the entire day and come back the next day refreshed. Don't trade during the weekend. Wait to the Monday of the following week and come back again to the charts renewed. Number 3, before you take any trade, decide how much you are willing to risk per trade. All right, decide how much you are willing to lose per trade, meaning, as I'm about to take this trade, if this trade doesn't go according to plan, how much of my capital am I willing to say, no problem, this money can go? If it goes, I'm fine, right? You have to make it up your mind and choose a figure before you enter the trade. You get? So if it doesn't work, no problem, you already know what you are losing, right? If it works, hey, wonderful. If your risk to reward ratio is like 1:1, 1:2, 1:3, you're good to go, right? So keep this in mind every single time. Don't let it shock you, right? How much you eventually lose, okay, per trade. Don't let it be something that is out of your control. Once it's out of your control, chances are you might lose the entire account. And this goes for those of you who don't like setting stop loss on every trade. Number 4 is going to piss off the greed in some of you. All right. Number 4, the 4th money management lesson and rule that you beginner traders must follow, right, is that even if you are on back-to-back winning trades, right, please and please resist the temptation. Resist with all your mind. Resist the temptation to increase your lot size, guy. Yeah, I know you're using 0.01 and maybe the first 2 or 3 trades you got back-to-back wins, but you start to feel confident, right? You can do this. You don't pass beginner level, you get. Why don't you just increase it to like 0.03 and try again, bro? You don't want to do that, man. To be a disciplined trader, you need to be able to follow your rules. And one of the rules is keep your lot size the same until your account grows way bigger than that lot size. You understand? Keep it the same. Don't be tempted to increase your lot size after back-to-back wins. And number 5 actually segues perfectly from number 4. Even if you've had back-to-back wins, right? Now, try as much as possible not to overtrade that day. You get? Because one thing I've learned from experience is that if you're having back-to-back wins, right? If you keep going down, if you keep trading because you feel like, oh, I can't lose, let's keep going. The more you trade in a day, right? The more trades you open, the more you're increasing your risk. Like your exposure to risk is increasing every single trade you take, and you will not know, the market will just go against you, and you can lose virtually all you gain that day. So resist the urge to trade and trade and trade and overtrade in a particular day. In fact, better yet, Try and keep to a rule of not taking more than 2 to 3 trades in a day. Once you hit 3 trades in a day, hmm, whether you are profitable or not, you stop for that day until the next day. Don't overtrade. Overtrading is That's how you enter emotional trading without knowing. People think that emotional trading is just, oh, you take back to back losses and then you want to revenge trade to get it back. Emotional trading is also on the flip side, meaning you get back to back wins. You now think, oh, why don't I keep going so that I'll get more money? That's greed, and greed is emotion. You get so keep these 5 things in mind. In fact, write it down on a pen and paper that you can remember and check it every time you want to trade. And I'll see you on the next one. Hit that like and subscribe button now.